Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about XENON Pharmaceuticals INC quarterly report. XENON Pharmaceuticals Inc. offers various businesses and services, including discovery and development of therapeutics for neurological and psychiatric disorders, delivery of treatments for patients with these conditions, product candidates such as plus azetukalner, a treatment for epilepsy and neuropsychiatric disorders, plus NB-921,352. A treatment for certain types of epilepsy, in collaboration with Neurocrine Biosciences, Inc. These services are focused on improving the lives of patients suffering from neurological and psychiatric disorders. The stock price of XENON Pharmaceuticals Inc. has dropped by a little over 9.79% in the past year due to several significant events that affected its performance. One major factor was the company's disappointing first-quarter earnings results, which led to a 17% drop in stock price after missing EPS expectations by $0.07. Additionally, the fourth quarter and third quarter 2024 earnings reports also contributed to the decline, with each resulting in a 3% decrease in stock value. Furthermore, despite exceeding Wall Street's loss estimates for the third quarter of 2025, the company's announcement of a $90.9 million net loss led to a 1.91% drop in stock price and an additional 1.6% decline after hours. These events demonstrate that XENON Pharmaceuticals Inc.'s stock price has been impacted by various factors, including disappointing earnings reports and significant losses, which have contributed to its overall decline of over 9.79% in the past year. The primary drivers of revenue growth or decline is primarily driven by three key factors. Firstly, collaboration revenue has been a significant contributor to growth, with a notable milestone recognized in 2025. Secondly, azetukalner revenue has shown substantial growth, increasing from $29,569 in 2024 to $42,676 in 2025. Lastly, preclinical, discovery, and other programs revenue have also experienced growth, rising from $5,916 in 2024 to $8,834 in 2025. These three drivers are the primary sources of revenue growth or decline throughout the document. Net income and profit margins decline due to compliance burdens. The net income of the company continued to decline in 2025, with a loss of $240.6 million compared to $168.6 million in 2024. This represents an increase in losses of $72 million. Profit margins also decreased due to increased compliance burdens and liability under state drug price transparency laws. The lack of profitability since inception has made it difficult for the company to maintain stable profit margins. The company's financial performance indicates a lack of positive operating cash flow. Despite 2 consecutive years of negative operating cash flows in 2024 and 2025, totaling $324,641,000 USD, the company has not yet achieved a profitable operating cycle. This trend suggests that the business may be struggling to generate sufficient revenue to cover its operational expenses. The company's debt level has increased significantly, with total liabilities rising by $5,089. This is further supported by the net cash used in operating activities increasing by 56%, indicating a potential rise in debt. Additionally, interest income decreased by $4.1 million and $11 million for short-term and long-term periods respectively, suggesting an increase in interest expenses. The company's financial performance varied across different segments and regions. Notably, azetukalner and preclinical, discovery, and other programs showed significant revenue growth in Q3 of 2025. In contrast, the net loss increased substantially, reaching a high of $90,896 in Q3 and $240,649 for the year-to-date period. The U.S. segment was also negatively impacted by healthcare reform efforts. Meanwhile, performance data for other foreign countries is unknown. Acquisitions and divestitures overview. Our company has been actively engaged in strategic growth initiatives through acquisitions. We have acquired other assets and technologies to enhance our offerings, as mentioned on page 29 of the summary. Furthermore, we have pursued strategic alliances, licensing transactions, and investments in complementary businesses to expand our capabilities, page 38. On the other hand, we have also been involved in divestitures, which include dispositions of certain business units or assets. Although specific details are not provided on page 38, it is clear that these transactions aim to optimize our portfolio and focus on core operations. The company's financial summary reveals that it has not distributed any dividends to its shareholders. Additionally, there is no record of the company engaging in share buyback activities. This suggests a focus on reinvesting profits within the business rather than returning value to investors through these means. Concerns about inventory buildup or supply chain disruption are evident in the financial summary. The reliance on third-party manufacturers increases risk, page 2, while supply chain issues stemming from raw material shortages or manufacturing disruptions abroad pose a threat, page 44. Restrictions, delays, and potential terminations of agreements can further exacerbate these problems, pages 50–55. Moreover, various factors such as collaborators' manufacturing issues, natural disasters, public health crises, and conflicts with collaborators can lead to supply chain disruption. That concludes the financial summary for XENON Pharmaceuticals Inc. Feel free to comment below, and I will be happy to answer them when possible.